Fintech Chatter TV. Presented by Tier 1 People. Leaders in Fintech Executive Search. Hi and welcome to Fintech Chatter, the show where I invite Fintech leaders along for a bit of a chat. I'm your host, Dexter Cousins, and in 2022, I'm showcasing the next wave of Aussie Fintech entrepreneurs. So show your support by giving us a like and subscribe, and if you're listening on the podcast, remember to leave us 5 stars and leave us a review. It really helps in helping me promote this next wave of Aussie Fintech entrepreneurs. Now on to today's guest. I'm joined by Andrew Wong of Koba Insurance. They were recently the winners of the Excellence in InsurTech Award at this year's Finnies. And Andrew is going to tell us a little bit more about Koba Insurance and his journey as an entrepreneur. Andrew, welcome to the show.
Hey mate, how's it going?
Awesome, thanks. Great to have you with us.
Good to be here.
First of all, congrats on winning the Finnies. It's amazing. A little bit of a backstory to everybody. Andrew and I caught up for a coffee in Melbourne the day of the actual awards. And I think, we were joking about your acceptance speech at that coffee.
It was a huge surprise, right? We genuinely are the youngest and smallest of all of the companies. And, coming from LA, you're like, acceptance speech. And I think it's the type of thing that you always have to prep for. It's like at a wedding or anything like that. You just have to have a little couple of words in your pocket just in case something happens. But it was a huge honor. And, there were some great companies that were nominated, and we're, pretty excited to be given the award. And, it kind of just kicks off the journey and validates the last, over 2.5 years worth of hard work.
Yeah. So maybe it's for the benefit of the subscribers. Could you share with us a little bit more about Koba Insurance and the big problem that you solve?
Yeah. So Cobra Insurance is a data-driven car insurance company. And so there's a couple of problems, maybe 2 main ones that we solve. One is the fact that insurance as a whole uses quite large aggregated data sets to determine people's risk of getting in an accident. But it doesn't actually take into any account any kind of real personal information, right? And really understanding how we can add new data sets to kind of put true personalization and customization into the insurance and risk models. The other big one is that if you think about insurance as a whole or car insurance as a whole, it's really just one product, right? We want to talk about personalization. We got to break up the product a little bit, right? Like everyone pays a different price. And inherently the price is determined by the insurance company. So at no time does a individual driver actually have any real input to what they're paying. So with Koba, it's what's called user-based insurance, or it is a pay per kilometer model. So the driver gets to determine how much they pay and how much they save based on the distance that they travel.
Cool. So what was the kind of inspiration behind the idea, Andrew?
Look, I want to say that I was a genius and I invented it and created it myself, but the reality is that telematics and user-based insurance has been happening all over the world for the last 10 to 15 years, right? It's pretty heavily embedded in the US. Almost everyone under the age of 25 uses it in the UK, and most of the market has some sort of user-based insurance profile in Italy. It's just simply not here. There's been a couple of false starts over the last couple of years. But the biggest inspiration for me was after working in the US and being close to some large insurers and seeing the innovation that was there. As we made the decision to move back to Australia, my wife's Australian and my kids are Australian, and grandma said it was time to bring the grandbabies back to Melbourne. The opportunity to bring a working model from another country back into Australia was just too great. And this was working. And so we thought we'd bring it back here and see if we could get off the ground.
We've seen some challenges where you take a model that's worked in another country and try to make it work in Australia. What do you think are some of the things that, the nuances to Australia that perhaps, these other businesses who have tried have failed, and what are you doing differently to make sure that it's a success?
So there's probably 2 things, right? One is a global data and digital kind of space. Australia as a whole has been a fantastic place to adopt new tech.
Yeah.
Right. I remember in 2011 and 12 when I was coming up through the ranks. Facebook was taking off and they had turned on their ad product. Australia was in the top 5 adoption markets for adoption. We've had Visa PayWave and PayWave and Tap and things like that for a long time versus, other countries still kind of slowly adopting to that kind of mobile fintech kind of way. And so as a marketplace, I think Australia is a great place to adopt, a great place to bring in new technologies. In terms of what we're doing differently versus the market and the rest of the world, I think it's timing, right? There are always good ideas out there, but if the timing isn't right, then a lot of the time the business just can't survive. And Koba's really timed this well. Probably even 4 years ago, right? It was an odd thing to really think about whether your phone was tracking you and offering you a level of personalization. But now, through the kind of very fast evolution of smartphones, most consumers are pretty happy to trade off a little bit of data and what's happening with their lives for a real value exchange, right?
Yeah.
So I'm happy for you to know a little bit about my banking or about my travel, a little bit about my search history, if you can offer me some real relevance back, right? That level of programmatic marketing and advertising has really made its way into the world, and I think we're generally okay with it. The other big one is that car manufacturers are making the move, right? So if you have a new Ford that's maybe 2 years old, or every single Tesla, Mercedes, and stuff like that, they are all data connected. Like, let's be honest. I've got more things in my kitchen that are data connected than in my car.
Yeah.
Right? Refrigerator, blender, there's everything in my house is becoming connected. And the car is one of the kind of last few big ticket items that isn't fully connected. And so Koba's working really hard to help connect up older cars, so 2006 to about 2020. And many of the new cars from 2020 plus have a pre-connection in them. And so with that changing, it becomes a really big and important reason for car manufacturers to be part of this data-driven revolution. The question is what's the next big ticket item for them? And it's insurance, right? And so the timing is right, and the industry is going to right, and it's not going to be us in the insurance world that really pushes the change. It's going to be the car manufacturers that push the change.
So how does it actually work then? Are you kind of manufacturing devices to go in the car, or is it something that you're working in partnership with car manufacturers to do?
I mean, if there are any car manufacturers listening to this podcast, I'd love to do a partnership with you. but no, like they are devices that we buy. It's called an Onboard Diagnostics port device. It goes into, it's about the size of a matchbox. It's a plug that's underneath your steering wheel. It's in every single car since 2006, and we manufacture them. And so we bring them in, we plug them directly into the car. Inside there's a GPS and accelerometer that kind of helps us understand where the car is. And so through that device, we can receive a bit of information about your car, what's wrong with it, how it's going. In the future, we'll be connecting directly up to the connected cars through a global data marketplace, as well as doing some tracking within the cell phone. But again, all of this is 100%. Through 100% consent of the customer.
Yeah.
Right? The customer has to say, yes, I want to be part of it. Yes, I want these savings. Yes, I want these extra services. And I'm happy to kind of tell you how far I travel. When I say tell us, I mean the device does it, right? It's not like you actually have to log in and change and do things like that, which has been solutions that have been evolved over the last 10 years. But with the data connectivity, you seem to get a lot of really kind of great value and savings pretty quickly.
I met with somebody last week who was just complaining about their insurance company and their car insurance. They moved recently and forgot to update the policy, and their car got broken into and they weren't covered. What's these are just kind of like real frustrations that just everyday people have with the insurance industry here in Australia. I don't know if you remember the chat that we had, but I shared with you that kind of originally tier 1 people was going to be focused on insurtech, and the incumbents were just so slow at moving and had no real need to move or make any change, that I just thought was a loss-leading business, and kind of very quickly, kind of broadened out to encompass all of fintech. What's your kind of general sense as to what the kind of the size of the opportunity is here in Australia, and how ready people are for a completely different way of being insured?
Yeah, look, the opportunity is obviously huge, right? Almost everyone has a car. There's about 20 million cars on the road at any given time. And so the change in the market and the opportunities there. I think the problem for Australia has always been a bit more macro. And as you probably can hear from my accent, I didn't grow up here, but I've been in Australia since about 2005. There's a natural duopoly in every industry, right? Whether it's supermarkets or whether it's shopping, whether it's banking, whether it's insurance, like there's a natural duopoly here. And it's just the nature of the way the market is, which means that the market is slower to move for the mass. But because Australia is so digitally connected, it moves faster at the niche and the early adopter spaces, right? There's been some good success with digital banks. There's been phenomenal success with online shopping in the last couple of years. It took companies like Catch of the Day to really offer huge value over 10 years ago and really show the market how things were supposed to work. And now all supermarkets and all retailers are online. I think it's the same thing is going to be with insurance, right? The big guys aren't going to move very quickly because the mass just isn't. It just doesn't fit their business model. But for early adopters that really like to sit on the edge of tech and convenience and really lean into global products, this is something that is extremely applicable and will add value to everyone very quickly.
Awesome. Now, this isn't your first time as a founder. I wondered if we could have a little bit of a chat about, I guess, some of your experiences that you've had. As you've mentioned, you kind of spent time in LA as well, and I think one of the kind of common themes that I get from people in my network is how difficult things like fundraising are here in Australia versus, say, Silicon Valley or the UK as well. I guess let's take the fundraising part first of all on your experience. How would you kind of what would you say about Australia if you're comparing back to LA?
Yeah, so I grew up in LA and I did some fundraising in San Francisco. I think the key difference here is that investors in Australia are trying to invest in businesses so they can make a huge return and a gain, right?
Yeah.
I think some of the biggest VCs in town are obviously very good, but if you take away things like Canva and Atlassian and some of the really, really big ticket items and look at kind of their investment strategies through the middle, it's questionable how well they've done. Okay, a couple of really big ones that always offset your returns and show that certain amount of growth. But I think the key difference is that still, from my experience, most of the investors are still looking for selfish gains. Which, don't get me wrong, that's 99% of investing, right? Like to make sure that you're growing a portfolio and making to grow capital and investment for your partners. Where I think it's different in the U.S. is that a lot of, and in Israel predominantly, is that they're there to fund innovation, right? The growth, the get rich, the returns they know are coming because through the growth, through the innovation, through the disruption of large markets, they know that it's going to come. The returns have been proven. And what ends up happening is that the US markets often are there more about just funding innovation, funding new teams, funding new ideas, and they're less worried about losing everything, right? And I think what ends up happening is you get some great ideas off the ground, you get some great ideas that don't get off the ground, but at the end of the day, the net market starts to grow a little bit faster. And I think as Australia starts to grow a little bit faster, gets a little bit mature, and as we get into that second and third round of founders who have gone and made successful raises and exits coming back into the industry to start to fund those types of growth, we'll start to see a really exciting maturity cycle here in Australia over the next 5 years.
Yeah. We had Dom Pym on the show. Actually, it was the day after the Finnies that we recorded that. And he was talking a lot about his family office, Euphemia, and that very kind of premise. We talked a lot about, hey, now we're starting to see that kind of first wave of exit founders being able now to support the next generation of founders. When it comes to the fundraising piece, what are the kind of alternative sources that you've looked to if you're not going kind of the traditional VC route, Andrew?
Yeah, so we have a consumer brand. So car insurance is for everyone. And we've been hit a couple of times from some Australian investors saying, don't go to do a crowdfund. Whatever you do, don't do a crowdfund. To us, it indicates the fact that you're not ready. And so my instant strategic pushback is, well, no. Crowdfunds are the best place to go to because as a consumer brand, not only are we getting adoption, customers, people using our product, and capital come into the market, we've all of a sudden started to build momentum with our audience and with our people to build something. If you go to capital from a fund, it's just money, right? I'm sure there could be some strategic value of someone joining your board, but it's just money, and I think that's the key difference. And that, at the end of the day, I do love and I do rely on some great investors, and we spend a lot of time interviewing our investors and making sure that the right strategic fit for our team. We've turned down some cash over the last year and a bit, simply because we didn't see how they could help us get to the next round. We often put a lot of strategic challenges in front of our investors and go, okay, well, if you come on board now, this is where we want to be in the next 12 to 18 months. What within your portfolio and your experience can help us get there?
Yeah.
Right. And for us, that becomes the number one most important thing in selecting the right partner for anything, whether it's investment or channel or distribution or advisor or even employee. How do you help us get to the next phase is the most important thing that we ask.
Yeah. And when it comes to, I guess, the crowdfunding piece, what have you found have been some of the best approaches to go to market? There's crowdfunding platforms out there. What have you found has worked for you?
Yeah, so we're a big believer in the virtual platform. We've used them. A lot of the other ones are just as great, have fantastic audiences. I think the biggest thing that you have to understand with any fundraise, whether it's crowdfund or venture, is that your business has to be ready for it, right? And I'm not talking about an effort. I'm talking about, does it have the right revenue? Does it have the right team? Has it hit the right milestones? Have you created enough value uplift from the last time you've done it? Like, just because you need money doesn't mean you're going to get it. Doesn't mean it's the right time to do it. And unfortunately, there's a lot of businesses raising when they need money as opposed to when they're ready to take it and scale and move to the next stage.
What are what's the point that you think, hey, we're now ready? Are there any kind of indicators that you've got that kind of then lead you to think, right, now's the optimal time to go out and start raising?
When you're bursting at the seams and you have too much demand or too much growth or too much opportunity, right? And you need more people in order to handle it all.
Yeah.
Right. That is the point in which you should be funding, because at that point also it's easy for an investor to say, yeah, that's a great idea, right? They're like, oh, you need another $1 million in order to sell another million things because you've already got 100,000 orders. Great. Like, here's the cash. Let's go. Let's move. Right. It's those types of things.
When it comes to the people part, we had a really good conversation about this when we caught up in Melbourne. And I think I kind of encourage you to continue the strategy that you've adopted, which is, you're running a really kind of lean ship. And I think you've kind of tended to focus more on caliber of talent rather than volume and being able to engage. Do you want to share a little bit about the kind of strategy that you've adopted?
Yeah. Talking about my part-time people strategy? Yeah. So, so if you were to ask Cobra how many people work for you, my answer is generally 11, right? Which seems like a really good chunky team for a startup, right? You've got people doing finance and legal and tech and marketing. You've got lots of people, right? But the way that we run our business is actually through a part-time model. And the thing as a founder for me, right? This is my fourth startup and probably my 50th idea on trying to get it off the ground. Every single one of those I had to start and run as a side hustle while I was running my full-time job. And in order to find the right people for our business, we've started in a very similar model. So we've gone out and said, are you working somewhere else? Yes. Are you interested in a bit of a side hustle to make a little bit of extra cash and to be part of something that's a little bit larger? Get your hands on something a little bit more innovative and more wider responsibilities than you have in your everyday work. Are you ready to do those things? And if the answer is yes, and people are willing to put in an extra 20 hours or 15 hours outside of their normal workday, to me, it shows immediately that they've got that entrepreneurial drive.
Yeah.
To me, immediately it shows that they really want to be part of something. All right. And they're not just resting on their laurels. Right? They are going out and creating something that they think they can be part of. Too often have I worked with people in a job that are waiting for someone else to tell them that they're ready for a promotion.
Yeah.
All right. And that's where the side hustle always comes involved. If you're someone like that, that's willing to do that, then it means that you're really, really, really part of this industry. And for that means 8 of the 11 of us all have a full-time job somewhere else.
Yeah.
right?
Yeah.
And in that sense, we also get the best. So we have people from some of the big four banks, some major software companies, guys that are product level guys, senior leads in those businesses, senior marketers in those businesses that have come to work to us. And on the other side, we get experts.
Yeah.
We get people that are super good at their job that within 20 hours of doing work for us is probably a full day's work for a junior or a mid-level guy anyways.
Yeah.
And so what we do is we have absolutely crash hot people in every single situation. And as we grow and as we get to our funding goals, we also have the first people we're going to hire, right? I went with a VC the other day and they said, "Oh, so the last question is who's the next key hires that you have?" I was like, "Oh, the 8 people that already work for me." Right? I give them full-time jobs, and all of a sudden, and sure, don't get me wrong, like the headcount bill will double, but we instantly have the people that were there, and if to get them at full time,
no recruiter fees, right? No risk or very low risk of it not working out, and that's the key. The data that we've got, Andrew. I think 90% of people who make a move directly from, say, a big four bank or a big corporate into startup the size of Cobra or something even a little bit bigger, 90% won't work out in the first 6 months. So, kind of from a risk management perspective, I think it's a really great strategy for both parties, right? Both, the founders and the people coming into the business. It gets them to, sense check, hey, is this really the environment, kind of where I can operate my best? Because, there's nowhere to hide, right? Like you got to just make things happen.
Yeah, and we've been really lucky in that sense. And the other big trick that we've used is every time we bring someone on, we're like, okay, who are the top 3 people that you'd like to work with again from your career? Who's the best 3 people, right? And we go and talk to those guys first, and from those guys we go, well, who are the top 3 people you would like to work with? And so we've kind of hit that second ring of people now, which really gives us a space of, because everyone has those 2 or 3 people they've worked with in the last 10 years that they remember and go, oh man, that guy Dexter was awesome. I really wish I could work with him again. Those are the people that we want in, and those are people that then we start to sculpt and mold the role around them, because we already have them pre-qualified. They already have a working relationship within the team. They already know how the flow and the cadence should work. So it's been absolutely fantastic. We haven't skipped it or missed a beat yet.
Awesome. Now, you clearly spent, we've talked about this spending time in LA. There's a lot of talk about the talent market here in Australia and there being a huge skill shortage, and talks about quality and stuff like that. What's your kind of sense check as to where the Aussie market is at for talent when you compare it to, say, Silicon Valley?
Yeah. So I think the talent shortage, I don't think there's a talent shortage at all. I think there's a quality offer shortage. So there's not enough really great businesses in that small to medium, even large startup size that can give the best people in Australia the opportunity, right? I think the other one is that just the experience level. There's just hasn't been enough great big startups or growth stage businesses that have come out of Australia, right? Because when we moved to San Francisco in 2016, I think it was, I came from a large corporate. It was global digital media, digital IT, some pretty serious experience. I was running into problems getting hired simply because I was probably 5 years too old and didn't have a successful startup on my resume. I hadn't come from a DoorDash or an Uber or a Facebook. I didn't have any of those names. And I was losing roles hand over fist to people, with, in terms of years, like significantly less years of experience, right? And when you look in the job description, significantly less jobs experience, right? The budgets I'd been working with were 10, 15 times larger. But I was never getting a look in because you didn't have those successful startups. And I think Australia, again, is just not quite there yet. And again, as it matures, I think that is a huge opportunity. I think, at a top end as well, there is some amazing talent leaving our shores. Most of my best friends from work over the last 10 years here in Australia, none of them are in Australia anymore. They've all gone to Singapore or Dubai or the US or the Europe. And a lot of these guys are outgrowing the opportunities that are here in Australia because the companies can't keep pace. Right? Because there's only so many C-level jobs at a big bank or a big, FMCG company. And this amazing talent is having to go elsewhere in order to find that opportunity. And these guys are absolutely flourishing.
And I think the frustration that I've got is, on two of the things that you mentioned there. The first one is, I absolutely agree with you about what you'd said around the quality of opportunities. And I'm a big advocate for that. You have to earn the right to hire top quality talent, right? It's not a God-given, just because you start a business and you're a founder doesn't give you the right to the best talent. And it's the way I would kind of like people to look at it is, right now, if you're a startup in the 4th division, right?
Yeah.
You're not going to go out and, Ronaldo and Messi aren't coming to play for you. One, because they're not the right people anyway. But, they want Champions League football. They want to be, fighting for titles, not playing on a Tuesday rainy night, getting tackled in front of a 1,000 crowd. So I think you've kind of got to hire and cut the cloth accordingly for where you're at, and then earn the right to top talent. And then about the brain drain, I think, that the biggest frustration I've got is that, we're going to lose people, right? You can't stop that for the very dynamics that you mentioned. But when these people come back, they're often looking for 6 months to get a gig. And the experience that they've got overseas is dismissed as not being relevant. Anything, it's way more relevant to what you're trying to achieve than anybody in the Australian market.
Yeah, I would take anyone, any overseas person looking to come back. I'd take them any day. The fact that they have worked in more dynamic markets with more challenges, with different teams, right? You're choosing a leader to lead your people.
Yeah.
Right. So you haven't played in insurance in Australia for a couple of years. I tell you what, insurance specifically, nothing's changed.
Yeah.
Right. If you were here 10 years ago, then you're probably still on track. Right. But you've got all this extra life experience, all these different challenges that you've really had to solve, really hard, complex problems. Right. Australia is lucky. We're a relatively insulated market. We don't have a lot of really difficult problems. Right. And so in which case you want someone who's willing to kind of challenge the status quo to come in and break it. But I love your analogy on being in the 4th division, right? But like every good team that's qualifying to the next division up, you've got to earn your time.
Yeah.
Right. And just because the people that you have on now, unfortunately, rightfully or wrongfully, the team that you have in the 4th division there may only be 4 or 5 players that are still in your squad once you get up to the Champions League, right? And you just have to understand how that is and understand when you bring in the people into the right places to play the right roles to help you grow.
Yeah, and look, my football team, Newcastle, so their manager Eddie Howe, is kind of recognised for taking a club he was with previously, Bournemouth, from the bottom of the 3rd division to being in the Premier League. Within about, I think, 5 or 6 years. And so, these things are possible, right? But they don't happen very often. And it's like becoming a unicorn, right? It's almost like, everybody thinks, oh yeah, I've started a business. We're going to be a unicorn in 5 years. And it's like, there's a science and a application that needs to happen, not just wanting it to happen, but actually being really precise in what you do and how you do it. And kind of mindset, the people you bring on, the investors you bring on, all of those things are going to determine whether it happens or not.
Yeah. And I think one of the things that, again, I completely agree. One of the things that in the startup world that we often get a little bit misaligned with, right, is the difference between innovation and disruption, right? And just a solid business.
Yeah.
Right. In order to become a true unicorn and to invent something, sure, you can get there super quick because you've invented something that never existed before. 100%. But in any other, in 95% of the businesses, it's just a better mousetrap, right?
Yeah.
And if it's just a better mousetrap, business profitability, business operations, business ethics, business, requirements and standards is how you grow and how you get there, right?
Yeah.
And it's not, and I think it's important to understand what game you're playing.
Yeah.
Right. And understand what type of coach and what type of players you need.
Absolutely. And it's not that long ago, right, that if I had a client that was valued at $100 million, that was a kind of pretty big deal, right? It's almost like, it doesn't mean anything anymore. And it's, no, that's a kind of, certainly for Australia, a pretty decent business that's, serving a big enough problem and doing it profitably. And I think this is, the interesting point that we're at now, Andrew, and I'm sure you're kind of sensing, the market has changed. And the shift is now from growth at all costs to kind of cash flow, cut costs at all costs, and very much a focus on cash flow and profitability. those business models, I think, that have, certainly in Australia, that have tried to do the growth at all costs, I think they're the ones that are going to be the ones that are going to really struggle, because they've got a team now and a business full of people that don't know what it means to make a profit, don't know how to make a profit, right? Like, this is something that, as a business owner, you kind of get drilled into, right? Like the attitudes and the sensibilities that you need to have around spending, strategy. You don't have the luxuries of kind of, innovation for innovation's sake, or, testing and experimenting for fun. There has to be a real intent behind everything that you do. And it's not to say, hey, look, you shouldn't fail or make mistakes, but to know that you can't keep doing that, you have to get to you have to have the intent of actually wanting to make a profit, not just growing a business.
Yeah, 100%. I always laugh because I think it's wild when people say, now you have to focus on profitability.
Oh, look, that is crazy, right? Like, I mean,
it's a crazy statement, right? Like, as a business, you always have had to focus on profitability. I think where we get a little, in one of your questions earlier about the difference between the U.S. investing and Australian investing is that you've always had to focus on profitability. I think in the U.S., they're willing to spend more money in the marketing aspect in order to grow faster, right? That money is there for innovation. Whereas here, investors, again, are looking for a little bit more solid returns, which is fine. It just means that your operational cost should almost always, not just now, should almost always be offset by the amount of money that you're raising, right?
Yeah.
If you're ahead of that, you better be inventing something new, right? In that test and learn. Whereas anything else, cost of marketing, cost of sales, should be offset by its growth, right? And so, and if you are getting nice, good valuations and raising a good amount of capital, then it just means you can grow faster, right?
Yeah.
And a good example for Koba is that we have a really solid cost per acquisition is about a third of the cost of the normal market, but our growth is still relatively linear. But we know if we were lucky enough to get a large amount of investing, we can go from comparison sites to digital video to TV, right? Like, it's a consumer brand. Obviously you want to be in TV and doing large scale social platforms, but you've got to be able to, again, within the Teams analogy we were using before, is step it up at the right time and when you need to be spending. Because if you're a brand new company like us and you put it together an idea to go on TV and do some ad campaigns and sponsor a football team, you're dreaming. Right? You're just the wrong stage in your business cycle. And I think those are the types of questions that need to be asked a little bit tighter.
Yeah. Now, we're kind of coming to a wrap up, but before we do, what's new for Koba? What can we expect in this next 12 months?
Well, we talk a lot about fundraising. So Koba is doing some fundraising in the next 2 months or so. We're doing both an institutional round with a couple of VCs. We're looking for a couple $1 million, of which we're about 60% subscribed. So if anyone out there has a nice big checkbook and wants to get involved, give us a ring. But we also are saving a good chunk of that to go to our crowdfund. Again, as I was talking earlier, strategically connecting with our consumers is the number one place that we want to play at. We, in the last crowdfund that we ran last year, we've been able to convert between 15 and 20% of the people that joined us into customers, right? And then we know that most of them have all told a friend about joining, right? And so instantly that has been a huge value for us as a business. We call that group the Koba Pit Crew. So we go to them pretty actively and we say, hey, this is the new innovation that we're thinking about doing. Vote on this, vote on that. And the ones that do, it really does go into an immediate roadmap for us. And so we'll be doing that. But most importantly, we are really just focused on that on the really considered growth. Right. So we're in one comparison site now. We hope to be at 3 by the end of the year. We've got 9 or 10 referral partners. We hope to be at 25 in the next 12 months. And then we're looking for some large enterprise partners. As we mentioned, car manufacturers and things like that are a great place to play. But there are other great distribution places that have large audiences that becomes really useful. There's a bunch of large scale companies out there that have employees that do a lot of fly in and fly out. Right, low usage car insurance is perfect. Right, pay for insurance while you're in or at home, and when you fly out, you're not paying for anything while your car's parked at home. And so we're looking for great partners like that, where our product becomes really, really applicable to your audience. And we've got the time, we've got the talent, we've got the team to kind of get us there. And every single week we seem to get a new partner, a new inquiry, something that seems even better than the last week. And so
awesome.
We're pretty excited to be going from strength to strength. And look, we got voted as a top player in InsurTech at the last Finny. So we really just want to make sure that we do the industry right by growing correctly, steadily, and really showing that this can be a success.
Fantastic. And what's the best way for people to reach out to you if either they're interested in investing, or we get great talent listening to this show as well? Where can they reach you, Andrew?
Yeah. So great question. So you can shoot me an email, andrew.wong@kobainsurance.com.au. Check out our website. We'll be doing the crowdfund on Birchal in the middle of August. So that'll start to be online probably in the next couple of weeks. If you are great talent looking for a role, if you're looking for a side hustle and you want to do a couple of hours extra on top of your regular role, we've got all different types of jobs, all different types of areas that need to be kind of fleshed out. And then hopefully, in September when we close our raise, we'll have enough capital to be hiring, 5 or 6 people right off the bat to continue to drive that growth. So give us a call, email. We're always around.
Fintech Chatter TV. Presented by Tier 1 People. Leaders in Fintech Executive Search.